Hello, good afternoon, traders. My name is Raul Rivera. I am the founder of themarketprofile.com. Today's actually Wednesday, December 13th, 2017. There you guys have it. You heard the bell. And let's start looking at today's markets. And today we had an interesting day, right? We had the FOMC announcement. The Fed managed to raise interest rates, and they are looking at 3 more interest rate hikes in 2018. I personally thought they would go for 4, one every 3 months or so, every quarter. But I guess they're only seeing 3. We'll see if they even follow along with that. They'll probably do 2. Uh, we know there's going to be at least 1 month where, or a period of time where the Fed might panic a little bit or something like that. But either way, we are at new all-time highs in just the S&P and the Dow futures. So let's take a look at what we got today. So today we took a look at the S&P 500 here. Yesterday we developed 2 distributions, a D followed by a P. So you can see right there. We opened right around here, and the range was pretty tight. This morning we decided that actually it wasn't too tight. It was pretty wide because we did make a low down here overnight on news that the Democrats won that Senate seat over in Alabama. So we have a value area high here. This value area low, we came very close to it in the overnight session, but didn't quite make it. This would have been the first place to start buying. And in order to sell, we were looking at this area up here because we did manage to build a little bit of resistance up here. So around 26.72. So what did I do? In this particular market, I decided to take a look at the Renkos here, and we had some resistance set right here at 26.73. So I got filled 10 contracts here at 26.73. Bought 8 of them back at 70.50, and then the rest up here at 77. Bought 8 of them back at 68.75 and sold the balance at 70.50 on a stop order right there. So you can see market reverse, traded back lower. The FOMC was seen as a positive event, and then they sell it all off. I mean, when we take a look at institutional order flow, it's pretty evident that they don't believe in the market moving any higher. I think they were all just taking profits today. A lot of selling. This is 50 contracts and greater, and their total volume net delta is about negative 10,000. That's pretty big, right? Institutional order flow very, very short today. Taking a look at the NASDAQ, somewhat of the same kind of situation. We wanted to be buyers down here at value. Didn't quite get it, but we decided if there is a place to be short, it's going to be right here, much like the S&P 500. And we wanted to short this area around 64.20-ish. I came in, again, took a look at the Renkos with the Fibonacci confluence, and we saw a position right here. Got filled on 10 contracts at 64.28. That's just a little bit above the 24 that we were looking to sell, which was good. So you can see we got filled at a perfect location. Took my first target here at 13.75 from 28, and then stopped myself out right here before the FOMC came out, and the market started pretty much rallying to the upside. So pretty decent day of trading from me. Now, where we didn't have really sweet trading was in the crude oil market. This one, we got the inventory number yesterday. We got a couple of distributions we were looking at here. We built a D followed by a P, followed by a B, followed by a B. We figured this value area low right here should hold up, and we can probably bracket the market, try to short it 57 to 58, 57.90 to 58, and try to buy it right down at 57. But they got 57, but then they took it down, as you can see, traded lower. If you guys take a look at the right here, is my market analyzer, and we can see my realized and unrealized profit on all the trades that I took today. Big loss here in the crude oil market. I took 10 contracts long, and I suffered about a 25 tick drop. And I mean, there were buyers at first prior to the crude oil inventory number, and then they sold it. Up next, we got the 30-year bond, and this one I wanted to short prior to the FOMC announcement. Um, right up here at this value area high. Unfortunately, not possible. Right after the before the FOMC number, I just FOMC number. It's not a number; it's a statement. And prior to that, I pretty much canceled any orders I had in there. But you can see the distributions in here working. The way I analyze these market profiles, I have to split them into balanced singular distribution profiles in order to find support and resistance. And it's real. I mean, I've had the pleasure of teaching and showing this stuff off to a group of great traders from the Golden Zone trading community, and a lot of them are pretty surprised at how accurate these levels are and how prices react to these, right? It's not the holy grail of trading, as you guys saw with my loser there in crude oil, but it can really put us consistently in some pretty good trade location, right? All we got to do is just be a little patient, and we'll be okay, because our ideas are pretty solid. So I wanted to short up here. FOMC, Janet Yellen talked her market knowledge or whatever, and and the markets here, they traded higher, right? Bonds traded higher, and I didn't want anything to do with that market. The Dow made some new all-time highs. Today's distribution D followed by a P. We can zoom in on this one, split the profile, and this is our edge over the competition: the ability to split profiles with a simple click of the mouse, being able to see the value areas instantly for these individual profiles. And this is how we find support and resistance. I mean, market profile has always been taught using a full day's profile, something like this. But this doesn't really show you, it'll show you a couple levels of support and resistance, but it doesn't really spell out the real picture. You have to split distributions into normal singular distribution profiles in order to, hang on, let me just split this one here, in order to see where the real value area is, right? Value area that prices will always have some kind of a reaction to, right? I mean, I did take a loss here in crude oil, but this trade in crude oil was pretty good. I mean, it made 12 cents at its very best, right? Prices reacted and were supported at that level. Okay, let's take a look at gold. Gold, I tried to get short, 1261. We didn't get there, but I figured, if the market can trade higher, it's probably going to be all the way up here around 1261, which is about 12 to 15 points away from where the market was prior to the FOMC. But as you can see, we actually, the place we decided to distribute around and find some resistance is this 1257 area, and I felt more comfortable shorting 61 than 57. In fact, shorting 57 didn't really provide much. As you can see, prices are just consolidating sideways there, so it wouldn't have turned out to be a very good trade. Would have been fluctuating between break even and a profit, pretty much, is what it would have turned out to be like. Next up, we got a few markets here. First, the DAX. I took a great trade here in the DAX. Taking a look at the market profile prior to the FOMC, we had a value area low here. I figured, hey, if the bottom of the market is in, it's going to be right here. And for the time being, it was right there. The market did bottom out right here, traded higher back into value, but then it reverted and traded lower as the Fed announcement came out. So we were looking to buy there. We switch over to the Renkos here. Perfect little value area low. Not value area. Perfect little Fibonacci confluence level right there. I got long at 18.5. 2 contracts sold. 1 contract at 129 and sold the other contract at 142. And that was it for that trade. So pretty decent trade right there. Next, I got the Euro Stocks 50. This one I didn't really do much in. We didn't really analyze it, but remained trading inside of a range. The euro, this one I wanted to short initially over here around the 78 area. Um, sorry, 1787 area, but that was prior to the FOMC letter K. So if we zoom in, we can see letter K, and letter K was 2 p.m. Eastern time. That thing just rallied from the rest of the time, and I really didn't feel like having a position, but it would have been up here. So much like gold, we were short a few ticks from getting filled on a position to the short side by the, in order to play with the FOMC. And finally, this is the last market I'll take a look at here, the yen. I mean, we've been taking a look at the yen recently, and the yen has been super weak against the dollar. We thought that the dollar would actually rise on the news of an interest rate hike, but I guess the rally in the US dollar has all, based on the hike of the Fed Reserve, has already been priced in, right? So now that the Fed followed through with their plan, it's time to sell the dollar and start buying these cheaper currencies. And I mean, the plan worked, right? Whatever they did, market traded down, sideways, and then up on the news here in the FOMC. Thank you guys for watching. Hope you guys have a great evening, and as always, happy trading.